Morning in an SEC filing, adding that it will lay off some 900 non-retail employees and, as you said, close stores. The number of company-operated stores in North America will decline by about 1% in fiscal year 2025, accounting for both openings and closures.
Starbucks approving a restructuring plan that includes job cuts and store closures. Let's talk about that with Bloomberg's Shelley Banjo. She's our managing editor for Global Business. And Shelley, this is Brian Nichols' second round of job cuts since he took over a little over a year ago. Since then,
I wouldn't buy. Hey, look, I'm speaking against myself. I have one of the most successful Starbucks in Trump Tower. Maybe we should boycott Starbucks. I don't know. Seriously. I don't care.
Hello and welcome. Today our focus is on Starbucks, the company that for decades symbolized the modern coffee house in the United States and around the world. In recent years, however, Starbucks has been facing mounting challenges. In 2024 and 2025, the corporation has increasingly become the subject of debate among analysts, investors, and everyday customers. The reason is clear. The growth model that once fueled the company's global expansion is showing signs of weakness. Sales are declining, and more customers are turning to alternatives. Key signals of a downturn. In its latest financial results, Starbucks reported a decline in revenue across major regions. In the US, its home market, this drop is largely tied to changing consumer habits. More people are brewing coffee at home or choosing lower-priced chains and independent cafes. At the same time, Starbucks is facing higher costs, from raw materials and rent to employee wages.
Rising competition. Starbucks was once seen as the go-to stop for morning coffee. Today, however, competition is far stronger. In the US, fast food chains have aggressively expanded their coffee offerings at significantly lower prices. On international markets, Starbucks is competing with local brands that better understand regional tastes and preferences. PIN. Customer reactions. Price increases have become hard to ignore. What was once viewed as an affordable, everyday coffee for everyone is now, for many, a symbol of rising costs. This shift is especially pronounced among younger consumers who are more sensitive to price and often look for balance between quality and affordability. PIN. Image challenges. Beyond the economics, Starbucks is also struggling with its brand image. Criticism on social media and in the press has become more frequent. Some point to the rising prices, others to the heavy standardization that makes Starbucks locations feel too generic. What was once seen as a strength, a consistent and recognizable cafe format, is increasingly being viewed as a weakness. Beyond declining sales and increasing competition, Starbucks is also facing significant internal challenges. These issues involve its workforce, its relationship with unions, and the way it engages with customers. PIN. Employee relations. Starbucks has long presented itself as a company that values its employees, whom it calls partners. Yet in recent years, dissatisfaction within the workforce has been rising. Many baristas report that workloads have become heavier, while wages have not kept pace with the cost of living. High turnover rates remain a concern, especially in major U.S. cities where living expenses continue to grow. Customer experience. The pressure on employees also affects the customer side of the business. Long wait times, order mistakes, and inconsistent service have become common complaints. For a brand built on the promise of a reliable, high-quality cafe experience, these service issues are damaging. Some loyal customers express frustration that the Starbucks experience no longer feels as welcoming as it once did. In response to falling sales, rising costs, and internal pressures, Starbucks is actively pursuing strategies to stabilize its position and regain momentum. The company is not standing still. Instead, it is attempting to adapt to a rapidly changing environment. PIN. Digital expansion. One of the strongest tools in Starbucks' playbook remains its digital ecosystem. The Starbucks mobile app and loyalty program have millions of active users worldwide. In 2024 and 2025, the company continues to expand mobile ordering, personalized promotions, and digital payment options. Analysts note that these tools not only drive sales, but also provide valuable data on customer behavior. PIN, menu innovation. Starbucks is also trying to refresh its menu. Beyond traditional coffee, the company has been adding more cold beverages, plant-based options, and limited-time seasonal products. These innovations are aimed at attracting younger consumers and responding to evolving dietary preferences. However, critics argue that constant product experimentation risks diluting the core coffee identity of the brand. International markets. While challenges are significant in the US, Starbucks still sees growth potential abroad. Expansion continues in Asia, particularly in China and India, where the middle class is expanding and coffee culture is still developing. At the same time, local competitors remain strong, forcing Starbucks to adapt its pricing and product strategies to local tastes. P. Cost management. To protect its profitability, Starbucks is pursuing cost-cutting measures. These include optimizing store operations, adjusting supply chain strategies, and, in some cases, closing underperforming locations. While such steps may help the balance sheet, they also risk further criticism if customers perceive a decline in quality or accessibility. P. Brand reinvention. Finally, Starbucks is investing in its brand image. This includes redesigning select stores, testing new cafe formats, and positioning itself as a more sustainable and community-oriented company. Initiatives in renewable energy, recyclable packaging, and ethical sourcing are central to these efforts. The company hopes that by aligning with consumer values, it can restore some of its lost reputation. At this stage, it remains uncertain whether these strategies will be enough. Starbucks is betting on technology, menu innovation, and international growth. But the competition and internal pressures remain strong. The next few years will determine whether the company can reinvent itself or whether it will continue to lose ground. Looking ahead, the future of Starbucks remains uncertain. As the company enters the second half of the 2020s, it faces a crossroads. Will it manage to reinvent itself for a new generation of consumers, or will it gradually lose its dominant position in the global coffee market? Analysts are outlining several possible scenarios. PIN Scenario 1: Successful reinvention. In the most optimistic scenario, Starbucks succeeds in adapting to shifting consumer preferences. By leveraging its digital platform, strengthening its loyalty program, and expanding in growth markets such as Asia, the company could stabilize revenues and return to steady growth. If menu innovation continues to resonate, with cold drinks, plant-based options, and new regional flavors, Starbucks may once again position itself as a trendsetter. Under this outcome, the brand would maintain its global leadership, though likely at a slower pace than in its peak years. PIN Scenario 2: Continued struggles in the US. Another scenario is less favorable. The US market, which remains Starbucks' most important revenue source, could continue to weaken. If unionization conflicts escalate and labor costs rise further, profit margins may come under additional pressure. At the same time, consumer fatigue with high prices and standardized store formats could push more customers toward local competitors and lower-cost alternatives. In this case, Starbucks might retain its size but lose influence, transforming from a symbol of aspiration into just another chain. Scenario 3: Global diversification. A third path emphasizes international diversification. Starbucks could rely on China, India, and emerging markets in Africa and Latin America to drive growth. In these regions, coffee culture is expanding and brand recognition remains strong. However, geopolitical risks, regulatory hurdles, and strong local players pose challenges. If Starbucks manages to adapt successfully to local tastes and price sensitivities, it could offset stagnation in North America. But if it fails, expansion abroad may prove costly and less effective than expected. PIN Scenario 4: Reinvention of the brand identity. Some experts argue that Starbucks needs a deeper transformation, Not just new drinks or apps, but a redefinition of what the brand stands for. This could involve a stronger focus on sustainability, community engagement, and differentiated store experiences. Instead of being the same everywhere, Starbucks might experiment with more localized designs, products, and atmospheres. Such a move could revitalize the brand, but it would also require significant investment and cultural change inside the company. Pin risks ahead. No matter which path unfolds, Starbucks faces clear risks. Competition is intensifying across all markets. Supply chain costs remain unpredictable, especially with global economic uncertainty. And consumer behavior, particularly among younger generations, is shifting faster than ever. A company built on routine and consistency must now navigate an era defined by constant change. Pin the big question. The ultimate question is whether Starbucks can balance its global scale with local relevance. For decades, the company thrived by offering the same reliable experience everywhere. Today, that formula is under pressure. To survive and thrive in the future, Starbucks may need to become less uniform, more flexible, and more connected to the communities it serves. As of 2025, Starbucks is still the world's largest coffeehouse chain. But its future will depend not only on financial strategies and product innovation, but also on whether it can rebuild trust with employees, deliver genuine value to customers, and adapt to the cultural shifts of a new era.
Despite challenges, Starbucks in 2025 stands as a success story, a brand that continues to define coffee culture worldwide and remains the benchmark for its competitors.